Incredible. Another great report. And it's clear to me every single week from these, Kyle, that there's a real market and it's seeding itself and growing. And there are real investment opportunities that are beginning to emerge. The fact that there are discounts on security tokens compared to the actual market values like Overstock and BCAP tells me that there's definitely still a liquidity discount for security tokens, of course, but for long-term investors, even 12 months out, they should be salivating over these arbitrage opportunities. I would think the statistics and the market data speaks for itself, but
For sure. This is part of the key argument why price transparency is crucial for these assets. Investors need to know what they're buying and the historical prices in order to make an informed decision for themselves. But beyond that, I am excited to transition the show into our final segment this week, our main topic, which is focused on breaking down the use of special purpose vehicles in financial markets. And so, Herwig, I know that you have a very strong background on this topic, and I can't wait to dive in.
yeah, this week's topic is definitely going to be more financially technical without so much focus on blockchain or tokenization. However, the function of special purpose vehicles are massively important to the capital markets, whether it be from the perspective of Enron and their actual use cases, or in how they're actually being used today. So, special purpose vehicles or SPVs are kind of like a banker or investor's training wheels. And after this segment, you will hopefully understand why SPVs will play a critical role in the security token industry moving forward and why we need to have a whole main topic dedicated to just this subject.
Yeah, this is definitely an important topic when it comes to investing in general. Like, as an investor or an issuer, an SPV is a massively useful tool. They can be efficient structures to manage a syndicate of investors and offer faster liquidity because an SPV represents a legal structure allowing investors to group together and act as a corporation instead of just a group of individuals, presenting many functional benefits to those investors.
Right. So let's unpack that, okay? So as the name suggests, and as Kyle just illustrated, most SPVs have a function of syndication. So syndication occurs when multiple investors are brought together to fulfill the full financing round together. So let's dissect this as an example to understand what the role of the SPV is playing here. So first, we're establishing a business entity for the sole purpose of managing an investment on behalf of a group of investors. So the vehicle part is referring to the entity, which most commonly is an LLC. That's a limited liability company. It's very easily to set up and structure as an SPV, but it's certainly not limited to any one specific tax structure for an entity for setting up an SPV.
That's absolutely right. You could have SPVs all around the world with LLCs having different rules and structures as well as the regulation differences across jurisdictions. So that's why many foreign investors will use a special purpose vehicle as a tax shield in order to make an investment in something. So common locations for this in the US are the Bahamas or the Caymans or the British Virgin Islands, where Europe has Ireland, which was and I believe still remains very popular, as well as other options like Malta and Estonia, also offering strong benefits. In Asia, you've got Singapore and Hong Kong and the like that are also acting as conduits for foreign capital into the region, which is almost always formed using an SPV, special purpose vehicle, in those specific locations.
And another great example of using an SPV right there, Kyle. Tax havens exist all over the world, and SPVs play the role of housing a specific investment in that location to prevent tax triggers and other situations. Great example.
Yeah, but I didn't mean to steal it away from syndication. So let's go back and revisit that use case. Can you walk us through an example of using an SPV, Herwig?
I think we should absolutely do that. So let's say we're a group of investors and we've come across an amazing investment opportunity. It could be the next big startup. It could be a house or a building we'll develop. It could be Kyle's crazy cousin's pineapple's commodities funds. And we need to come up with $10 million in order to make that investment. The problem is you and I only want to each put up $1 million. So we need 8 more people to at least do the same. Now, Kyle's crazy cousin, let's call him McGregor.
Conor McGregor is my cousin, yes, with a crazy pineapple commodities hedge fund. Yep, let's go with that.
All right. The thing is, McGregor is crazy and only will do business with Kyle. So we have a dilemma because only Kyle can invest. But Connor doesn't care if you invest directly or if you use a special purpose vehicle, Kyle. So instead of you being a personal owner, Kyle's actually going to set up, Pineapple SPV1 LLC, and now has the capacity to add investors like me and others, while Conor McGregor just sees one investor on his capitalization table. That's his ownership chart.
Right. So from a management perspective, my crazy cousin or the issuer that you are investing in doesn't need to worry about adding 10 new investors and dealing with each one of them individually. It's just one vehicle that a lead investor manages and sometimes might even take a fee for doing all that work.
Right, and the rest of us are happy potentially just to be able to participate in the deal. And so, furthermore, an SPV investment on our side means that I can trust Kyle as the lead investor to take care of my investment, allowing me to be a little bit more of a passive investor. But it also gives other capabilities. One, most of all, being the ability to sell your investment easier.
So to be clear, we're talking about an SPV investment being easier to sell, being an investor directly in a company, right? So the SPV is easier to sell and transfer than if you were to just do it directly.
Yeah, that's exactly right. So when you're directly investing into the company, you may typically need to require the permission from the issuer to sell that investment. So perhaps you may even need board approval. Now with an SPV, all you really need is that SPV manager's approval, which in this case is Kyle, which means that if I can legally sell after my lockup period, then I can do that much easier by assigning them my stake in the SPV in exchange for cash instead of jumping through hoops to sell my shares directly within the company.
Right. So in that way, I want to make the distinction that the process is still completely manual. So you still need lawyers involved, and the share registry is managed by the SPV manager, typically on Excel. So with security tokens, this process is entirely digital and can become so much more efficient, also enabling for self-custody for investors through security tokens, which means the capability of creating markets and digital transfers and atomic swaps for the shares themselves, which are all something that just aren't possible without blockchain and are very exciting to talk about.
I mean, totally. SPV tokenization will be a huge thing and play a huge role. We will touch on that in just a sec, but hopefully our listeners are starting to get an idea here now for why people are setting up and using SPVs in the first place.
Yeah, I think another example is portfolio management. When you have all your different assets in an SPV, it's much easier to manage them all through tools like series SPVs, which you should definitely ask your attorney about. And SPVs are also much easier to lever against.
Lever against, as in like you're talking about loading them up with debt, right?
Yeah, so thanks to an SPV now owning the asset, say 10% of a hot startup worth 100 million, we can now find somebody that wants to use the SPV as collateral to let us take out a loan in cash for, let's say, 5 million, while the SPV still continues to grow in value. In that regard, if you have a portfolio, you could easily combine all of them to get even better terms or an even larger loan.
Yeah, right. And if you invest in all these opportunities personally without an SPV, you would have to now personally guarantee your assets, right? It becomes a much more difficult process to take advantage of something like this. That's definitely another great example. I hope our listeners, you're putting this together, that SPVs are essentially the first version of tokenization, right? Enabling a lot of these financial benefits that weren't before possible that we've been talking about on the show. Easier liquidity, easier investor management, easier leverage capabilities.
Yeah, it's kind of like SPVs are almost like smart contracts too, where trusts or other common uses that can be structured for the purpose of wealth transfer. So the same goes for corporations who want to house intellectual property separately, just like you would any other asset because of portfolio benefits that we've already mentioned.
Yeah, I mean, totally. SPVs are incredible tools, but can also be opaque and misused, which is what Enron did back in the day. So there's a great documentary called The Smartest Guys in the Room. If you want to learn more about that, really highly recommend that. But all in all, SPVs are, they're a very useful structure. They're a vehicle, if you will, for investors, whether it's for syndication, tax shielding, investor management, wealth transfer, or even to create leverage and liquidity, which is why they will play such an important role in the security token space, because there will be so many tokenized SPVs.
So maybe we should just wrap up the segment by telling us why somebody would tokenize an SPV.
I mean, that's definitely a softball question here, Kyle. I'll try to answer in the order of magnitude. So the first is definitely, I'd say, international access. So SPVs can access global markets for liquidity or leverage or tax shielding purposes, which means we're going to see even more SPVs get used for tokenization for those three purposes because it makes it that much easier. But also going back towards investor management, obviously security tokens enable much greater efficiencies and capabilities that you couldn't do manually, from automated dividend distribution to being able to handle even larger investor sizes to, of course, offering self-custody for investors. Security tokens will be the future of SPVs, just as they are the future for all assets and securities. I mean, now you throw in programmatic asset management and you'll be able to take advantage of the benefits of SPVs better and easier than ever before.
That's very well said, Herwig, and I think that pretty much explains SPVs and their relationship to security tokens and financial markets. Of course, it's a tricky topic, so we're always happy to answer your questions on Twitter or LinkedIn or wherever on the topic. We also do sometimes speak a lot of jargon, so whenever you hear a word you don't quite understand, I highly recommend you go to our YouTube channel where you can find all of our main topic segments that are individually clipped out right there, so you can kind of maybe look up a glossary of the different terms we've talked about and concepts we've covered in the past to help you understand just a little bit better. We've got over 66 different topics for you to listen to right now, and that's only going to grow.
Yeah, definitely. And be sure to join our community at stomarket.com/news. That's where you can submit other articles and events and also comment on it. You can also ask questions to the community. So anyway, we hope to catch you again next week on Tuesday for episode 68. Thanks for listening.